Good afternoon, everyone. Welcome to NITYA Roundup April 2022 edition. So, yes, the government keeps on making so many changes in indirect tax laws, and we are never out of content. So, in today's roundup, I'm joined by my colleague Swati, who will be taking some part of the session. So, starting with we'll be covering recent changes, news. There is one pain point in the GST, which is availability of ITC where supplier has not paid GST. So we'll be covering that, including recent Gujarat High Court ruling, which is relevant for the issue. Then we'll cover key rulings which have come up in last 1 month, and we'll close with the synopsis. Thereafter, we'll have a live Q&A round where the interested participants can raise their hands, ask their question live, and we'll be answering it. So starting with the recent changes. So this is regarding validity of foreign trade policy and handbook of procedures. It's unfortunate that the last foreign trade policy was of 2015 to 2020, which expired in March 2020. So even in last 2 years, the government could not finalize the new policy and keeps on extending the earlier one. So continuing the trend, the FTP, which was valid till March 2022, has been extended till September 2022. Now, post introduction of GST, foreign trade policy and custom notifications also grant IGST and cess exemption for importers who are EOUs or who operate under advance authorization or EPCG scheme. So the government has extended those customs exemptions also till June 2022. Important to note that the custom exemptions have been extended till June 2022, whereas foreign trade policy is till September. So when these custom exemptions were issued in 26 GST Council meeting, the government GST Council issued a press release where it provided that these customs exemptions are interim solution pending introduction of e-wallet. So many of you may be aware that initially the government's thought was not to grant any upfront exemption, introduce an e-wallet scheme in which there is an electronic credit and debit depending upon imports and fulfillment of export obligation, etc. But due to various reasons, this could not be extended. So dichotomy between the dates of June and September seems to indicate that government is ready with the e-wallet scheme, which may be introduced from 1st July 2022. Going ahead, the government has issued customs electronic cash ledger regulations 2022, which are effective from June 2022. So this is similar to electronic cash ledger system, which we have in GST as well. So just to summarize, because it's a new concept as to how it will work, is that an importer needs to create a deposit challan, which is in the form ECL2, submit the same on the on the common portal, which is a customs portal. And this has to be done within 15 days time frame. On receipt of CIN, there'll be a credit in electronic cash ledger. This amount will be available for payment of duty, interest, penalties, etc. The payment of tax has to be done through a challan, which will be ECL3, which will be debited in electronic cash ledger. The credit will be done in electronic duty payment ledger. So this is similar to electronic cash ledger and similar ledgers in GST regime, which will be ECL4. And whatever ECL balance is available, one, it can be used for payment of custom duty liabilities. But yes, the government has also provided that if any amount is lying, the importer can, or the taxpayer can claim refund. He needs to file an application. Once he files an application, the amount will be blocked for further use. And the refund application needs to be decided by the authorities within 30 days. Moving ahead on the changes, the Finance Act 2022 received presidential assent on March 30th. In our last roundup, we comprehensively covered the changes made therein. A very important change which was relating to legal metrology, packaged commodities rules 2011. There were multiple changes which were coming into effect from April 1, 2022. The government has deferred it by 6 months, providing a breather to the industry. So now these changes will be applicable from 1st October 2022. Apart from the extension, the LMA notification has also issued following clarifications and amendments. One of the change was introduction of a new concept of a unit sale price, which was to be calculated per unit, etc. So now they have clarified that when USP or unit sale price and retail sale price is same, means the quantity is one. In that case, USP need not be mentioned separately. Secondly, because this extension came at the fag end of March, where many of the companies would have implemented these changes. So the government has specifically provided that even if a company is using amended labels, that will not be subject to prosecution. Then we had a second schedule under legal metrology law, which provided that certain commodities need to be packed in standard quantities. So even that requirement has been done away with. Now, coming to news. So group of ministers, they are pushing for GST reforms for rigorous enforcement. Quite surprising because the government GST collection is increasing month by month. Presently, it stands close to 1.5 lakh crores. So despite that, the governments are pushing for rigorous enforcement, and that we see at the ground level as well. A lot of taxpayers, a lot of our clients are going through departmental GST audits, different sorts of investigations, etc. So this year is likely to be full of challenges from that perspective. The government is considering merging of GST rates of 12 and 18% into 15%. The government is working on the guidelines for issuance of GST summons. This is particularly in context of issuance of summons to senior officers of the company like CEOs, directors, etc., which has become a trend now. Then against many of the pharma companies, the DGGI has conducted investigations, and they have issued a press release also. They have collected a lot of taxes from these companies. And here the issue was, I'll say, an infamous issue of ISD versus cross charge. So this is GST collections on the cross charge only. Coming to section 16(2)(c), which is what happens in a situation where supplier does not pay tax, whether ITC is available or not. So the conditions for availment of ITC are that recipient should receive goods and services. He should possess a valid document. Supplier has furnished GSTR1, which is communicated to recipient in GSTR2B. These are not restricted in 2B. And yes, the condition 3C, that it has deposited the tax. Now, let's see what is the jurisprudence on this issue. That if as a recipient I have purchased some goods or services and my suppliers do not pay the tax, whether I'll be entitled for ITC or not. Firstly, the VAT jurisprudence is very relevant because verbatim conditions used to exist under VAT regime as well. So there are at least dozen of different high courts, including Arise India, Delhi High Court, which was affirmed by Supreme Court as well, where they consistently read the condition of deposit of tax into the government account as only applicable in a situation where the recipient was hand in glove or the recipient's conduct was fraudulent. In other words, the courts consistently held that where the recipient is acting in a bona fide manner, then ITC cannot be denied. The only adverse ruling is in case of Mahalakshmi Cotton, Bombay High Court, where they held that this condition needs to be applied in all cases, whether fraudulent or bona fide. And again, this was also affirmed by the Supreme Court. In our view, Mahalakshmi does not reflect correct legal position. So the VAT jurisprudence totally comes in handy while fighting cases in GST regime that ITC should be allowed to all bona fide recipients. Now, as far as this condition is concerned, under section 16(2)(c), in multiple high courts like this Bharti Telemedia, Delhi High Court, Sahil Enterprises, Tripura High Court, this condition stands challenged. The high courts have admitted the challenge, but yes, it is pending final decision. Under GST regime, Madras High Court in the case of DY Bethel, when they were dealing with a similar issue, they quashed the order of denial of ITC to recipient and directed the authorities to firstly undertake investigations against the supplier to recover those taxes. In case of LGW Industries, Calcutta High Court held that if the recipient has genuinely purchased and those transactions were completed, even if the supplier's registration is cancelled subsequently, ITC cannot be denied. So this ruling also affirmed availability of ITC to bona fide recipients. Now coming to recent Gujarat High Court ruling, in this case, there was a default in payment of tax by the supplier and recipient's electronic credit ledger was blocked. High Court quashed this blocking order on multiple grounds. As far as the current issue is concerned, the grounds which the High Court took was that presently there is no system-based matching of ITC. So the High Court referred to GSTR 1, 2, 3, which was initially planned to be introduced. And the High Court referred to the VAT jurisprudence and again held that a bona fide recipient cannot suffer on account of default of supplier. So again, even this ruling will come very handy for all these disputes. So why we took up this issue specifically in today's session was that many of our clients, while going through department GST audits, the first objection which department is raising is, to the extent your suppliers have not deposited GST, ITC will not be available. So in our view, there are multiple grounds on which it can be defended. And those grounds can be summarized that there is a legal maxim, lex non cogit ad impossibilia. Law cannot compel a person to do the impossible thing. In this case, the authorities are effectively asking recipient to pay the tax which has not been paid by the supplier. Even GST portal not to 100% accurate way communicates whether my supplier has paid the tax or not. Under GST law, section 73 imposes burden of payment of tax on the supplier only and not on the recipient, whereas by denial of ITC, you're effectively asking me to pay the tax. This is violative of Article 14 because it treats both defaulting and bona fide recipients at par. And yes, on an overall basis, recipient cannot suffer for default of supplier. Now, the point which I was mentioning that even today on the GST portal, the return filing status of the supplier will be available and percent of liability paid, which you can see in the screen. But yes, in respect of the invoices on which recipient is claiming ITC, whether tax has been paid on those invoices or not, that is still not visible. And yes, the government proposed amendment in section 41, which are not effective. So for the sake of completion, we'll complete that. We'll cover that as well. That section 41 provides that the ITC has to be reversed along with interest if supplier has not paid tax, and such amount can be re-availed subsequently where the supplier pays a tax. So moving ahead on key rulings, over to you, Swati.
Thank you, Puneet. Good afternoon, everyone. Before coming to the key rulings that have come up in recent past, let me take you through the poll that we have conducted a week ago. The question that was put was, will Supreme Court COVID limitation extension order apply to GST refund claims? On this, 69% people said yes, the order will apply on refund claims, and 25% said yes. 6% people were not sure. So on this issue, there has been a lot of talk for quite a long, and few high courts have already given their decision in favor. This issue has arose again in the case of Gamma Ghana. In this case, the petitioner had applied for refund after the statutory time limit of 2 years. He had relied upon the Supreme Court order. He was of the view that the period from March 2020 till Feb 2022 has to be excluded. Allahabad High Court held in favor of the petitioner and has held that Supreme Court limitation extension order will apply in this case.
Yeah. So in our view, this is not a correct ruling because the way Supreme Court's COVID limitation order is worded, it applies only to the litigation proceedings. Those can be show cause notice, appeals, etc. Those will not cover statutory filings, which can be like the returns, refund claims, etc. So on merits or on interpretation of the statute, this ruling is not correct. But yes, be it the extraordinary jurisdiction of the high courts, or otherwise also number of high courts have taken a similar view. So the courts have applying the Supreme Court's COVID limitation extension order even for the refund claims.
Now coming to the next ruling, Screenotex Engineers. In this case, the petitioner was engaged in supply of goods which qualified as deemed export under GST. Now in GSTR1, deemed exports are specifically reported. However, while filing GSTR1, this petitioner missed to tick deemed export. He tried to amend GSTR1, but he could amend few invoices only. So for remaining invoices, he is before Gujarat High Court. The High Court has instructed department to allow this petitioner to amend his GSTR1 without going into the time limits for making such amendments. The next judgment is VRS Traders. In this case, DRC 01A was issued on the petitioner, which is a prior show cause notice intimation. Basis this DRC 01A only, an assessment order was passed. The petitioner challenged his assessment order before Madras High Court, and High Court has quashed the order because issuance of show cause notice is mandatory before passing an assessment order. In our view, this judgment is perfectly correct since it is in line with the law.
One point I want to highlight here is not specifically relating to this judgment, but in general relating to GST law. Unlike pre-GST laws, which were quite straightforward, like a show cause notice has to be issued, etc. Under GST law, there are a number of different forms relating to pre-show cause notice, orders, etc., which have been prescribed. So apart from contesting the issue on merits, the taxpayer should also consider whether the department is following the proper procedures, like in this case, DRC 01 was not issued, etc. And they should raise those grounds as well in their litigation to support their case.
In the case of Apex Leather, the petitioner had applied for refund, which was rejected by the officer. Against this refund rejection, the petitioner filed an appeal before Commissioner Appeals, which was also partly rejected. Now, legally, against this order of Commissioner Appeals, petitioner is assumed to file an appeal before GST tribunal. However, since tribunal has not been constituted in GST, he preferred writ petition before the Allahabad High Court. Now, the department has challenged the maintainability of this writ on the ground that petitioner should have gone before tribunal instead of coming directly to the High Court. The Allahabad High Court discussed that non-constitution of tribunal has left so many taxpayers remediless, especially those who cannot afford the high cost of litigating in courts. So, basis this discussion, the matter has been referred to larger bench. On the upcoming ruling, we conducted another poll. The question was, is inverted tax GST refund available where both output and input are same? 38% people said yes and 62% said no. On this particular issue, there was a discussion in the case of Shivako Associates. The petitioner was engaged in procuring LPG in bulk and was supplying LPG in smaller quantities. The GST rate on inputs and outputs was 18%. However, subsequently, the rate was reduced to 5%. So there was a situation where this petitioner had inputs procured at 18% and was supplying at 5%. So for the accumulated ITC, he applied for refund under inverted duty tax structure. Department rejected this refund basis circular number 135, which says that if inputs and outputs are same, refund will not be allowed under inverted tax structure. Calcutta High Court observed that there is no such restriction in the law, and a circular cannot plant a restriction which is not in the statute, and has allowed refund in absence of any statutory restriction. In our view, this judgment is perfectly correct since Section 54 read with rules nowhere specifies such restrictions. Next, in the case of Parekh Plasticum Distributors, the petitioner had applied for refund, which was delayed by department due to some technical glitch. Gujarat High Court directed the department to grant interest at 6% under Section 56 of CGST Act.
So one point relating to this ruling is that number of times these export refund claims, etc., are not sanctioned because the government's portal has issues, problems, etc. So Section 56 of the CGST Act is very plain and clear that if the refund is not sanctioned within 60 days, then interest has to be granted, irrespective of the reasons that government's portal is not functioning, etc. So in all those cases, the taxpayer should continue to stake the claim for interest.
This is an advanced ruling. GRB Dairy Foods. In this case, the appellant was engaged in supplying some dairy food products to its retailers. On achievement of certain specified targets by the retailers, he was supplying some goods and services like TV, air coolers, foreign trips to them, for which he was charging no consideration. The question for the authority was whether ITC will be available on these goods or services or not. The AAAR observed that the accounting of these promotional schemes as sales promotion has nothing to do with GST. Further, the goods and services that have been distributed by supplier to these retailers are put for personal consumption of retailers. So Section 17(5)(h) will trigger and ITC will not be available. Also, the rewards distributed qualify as gift since no consideration was charged and they were given voluntarily by the supplier, and hence ITC will not be allowed here. In our view, this ruling is not correct. Firstly, the personal consumption at retailers' end has nothing to do with ITC eligibility at suppliers' end. Secondly, these goods and services were given by supplier to satisfy his contractual obligations. These were not given voluntarily, and hence ITC should be allowed. In the case of Fluid Developers, show cause notice was issued on the appellant basis the ground that income as reflecting in 26AS was not matching with income appearing in service tax returns. SESTAT has held that 26AS cannot be taken as a basis for raising service tax demand. In our view, this judgment is also correct since department has been issuing show cause notice to taxpayers basis income tax returns 26AS forms without going into the details or without applying logical reasoning. Next, in the case of Pradeep Port Trust, the recipient has entered into contract with the supplier appellant that he will place a minimum order. In case of failure in placing minimum order, the supplier will charge penalty by encashing bank guarantee of the recipient. Now, in this encashment of bank guarantee, the department has raised question. SESTAT has held that service tax will not be leviable here, since these penal charges are charged to refrain other party from violating contractual terms. In our view, this judgment is correct, and taxpayers can take support of this judgment in GST as well, since department is raising questions on various compensation, penalty, etc. charged as per contractual terms. So this was all about the key rulings. Now Puneet will take the session forward.
Yeah. Thank you, Swati. So summarizing the whole session, FTP and handbook stands extended till September, whereas EOU and other export-related exemptions like advance authorization, they are extended till June 2022. It is likely that e-wallet scheme may be introduced from 1st July. Legal metrology changes deferred by 6 months. So it gives an opportunity for the taxpayers that if they miss the bus or otherwise, if they want to make sure that their labels and packaging is compliant, they can do that. The high courts are repeatedly or consistently taking a view that Supreme Court's COVID limitation extension order applies to GST refund claims as well. ITC will be available to bona fide recipient. So the condition of non-payment of tax will only apply where supplier and recipient were hand in glove. GST inverted tax refund will be available even if input and output supplies are same. If the department passes any order without issuance of SCN, that will be invalid. And lastly, Form 26AS under income tax law that cannot be used for raising service tax demand. So thank you everyone for joining in large number. With this, we wind up our session. Thank you. Take care.